In volatile markets, risk management isn't optional, it's absolutely essential. I bet you didn't know that most traders blow up their accounts because they ignore risk management. Let's change that for you. When we think of risk management, what is that? Okay, the best place to start is, hopefully all of you know. Now, sometimes I ask this question and people say yes, but hopefully all of you know a 100% win rate in trading has never been done and will never be done. Okay, no one, unless, well, I always like to give a caveat. If you make like one trade in your life, okay, one trade, you make money and you retire, okay, you might have a 100% win rate. But if you make 2, 3, or 3,000 trades, you're never gonna hit 100%. Now, a lot of people fixate on win rate. Like they think win rate is the most important thing. It isn't. The most important thing is risk management. Because if you accept the point that losing is part of the game, what takes out so many traders when you hear that 80, 90% failure rate, it's because they make, 2, 3 good trades up $200, $300, which is good, especially if you're new. But then all of a sudden they lose and it's $1,000. Okay, so now they went from a nice little couple days to wiping out maybe months worth of that good trend they were on. Now, if they would have taken a $100 loss, well, they're still green on the week, okay? Now, gave back some gains. Nobody likes to do that, but it's part of the game. But instead of sitting there ready to give up because, man, I just blew 2 months worth of good trading, they could have cut that loss and still been green. I mean, sure, counts down a little bit, but I'm still up here instead of way down here. And up here, I'm like, you know what? Hey, that trade went against me. It happens, versus wanting to give up. So actually, let me know in the comments, how many of you are kind of on that emotional roller coaster where you go from, oh man, it's all figured out. I'm going to quit the job. I'm ready to go. And then all of a sudden, 5 minutes later, you're like, what am I doing with my life? I'm never going to do this again. One of the best ways to accomplish this is number one, with mindset, and then number two, having a trade plan. Now, when I think of mindset, one of the kind of thought experiments or analogies I like to use is, I call it the rule of 5, okay? And it's a simple thought experiment, but when I explain it to people, a lot of times they're kind of like, never really thought of that way. So in the rule of 5, I just give this kind of illustration of, let's say you trade once a day for 5 days, Monday, Tuesday, Wednesday, Thursday, Friday, okay? Monday, you lose $100, Tuesday, you lose $100, Wednesday, you lose $100, Thursday, you lose $100. But then Friday, you trade, you have a good trade, goes in your favor. Maybe it's a Friday short squeeze. We love those. And you make $500. Now, you think about it, net, you're up $100 on the week. Nobody wants 100. We all want more than $100 a week. But the point is, by cutting those losses quickly, losing small amounts, you're now green on the week. You're technically profitable over a week with a 20% win rate. Now, most people, when I say that, like sometimes when I give this kind of analogy, I'll say to them first, I'll say, do you think you could be profitable with a 20% win rate? And if it's new traders, universally 2/3, 75, 80% are like, no way. How could you be profitable with a 20% win rate? Well, if you use the rule of 5, it works, okay? And listen, these stocks that we trade, even with small positions, you can easily make $500 in a day. It's not out of the realm of possibility. But this is where you bust the rule of 5 and you lose 400 on Monday and 500 on Tuesday and 600 on Wednesday. Like, think about it. You have to absolutely put you in the position of an absolute, like, once in a year trade just to get back to break even. Now, the guy or the gal that respects the fact that, oh, okay, this one hit my stop, this one hit my stop, I'll come back tomorrow. Sure, it's not fun, but you end the week profitable. And I can't stress that enough. Now, how do you obey the rule of 5? This is the second part and the most important part. I really just, and you probably heard me say this, if you've been on the channel, I'm kind of known for the have a plan guy. People joked I should like have it tattooed on my forehead. But it's just such a simple thing that I see so many struggling traders not doing. What I teach and what I do is every trade before you enter. Now, People that want to be impulsive, FOMO, they don't want to wait. This takes 30 seconds, especially if you're familiar with technical analysis. So the way we use technical analysis or use the chart is we use support and resistance levels to guide us through that trade. So if you see some big runner, you're going to flip to the multiple time frames, the 2-day, 5-minute, the 2-month, 15-minute, the 1 year, 1 day. You're going to quickly map out areas of support, areas of resistance, and look at the range of the stock in previous days. Now, it sounds time consuming. It's not. Now, it might take you as a brand new trader 5 minutes. Once you get better at it, we're talking literally seconds. And by using the chart to say, okay, this stock that's breaking out, if it busts below this consolidation range, I'm out. That's my stop loss. You'll write that down. So now you've got your entry, you got your stop loss, and then we look at the range of the stock on that day in previous history to be able to look and see, does this stock have the potential range to pay me out a minimum of 3 to 1 what I'm willing to risk. So let's say it's a $1 stock and you're risking 90 cents. So you're risking at 90. So you're risking 10 cents a share. You're going to look at that stock's past history, say, does it have the potential to go to $1.30 minimum? Okay. And if it does, which many of these do, you'll see these stocks with dollars of range. Well, that's an acceptable trade. You can now write a trade plan. So let's say it's trading in the 90s and it's creeping up on the dollar cross play, one of our favorite patterns. You buy at $1, you risk 90, you set your initial goal at $1.30. Now that could be a scale out point, or that could just be take all profit point. So now, by having a plan, what happens if the trade goes against you? Let's say in this scenario, you got 1,000 shares. Hits 90 cents, you lose $100. Rule of 5, right? When that stock goes in your favor, let's say it busts $1 and spikes hard, now you can either sell all at $1.30 or take some off, let it continue if the stock continues the trend. So now you win and you make 300. So if you repeat that process, over time, whether it be days, weeks, months, years, or decades, think about it. You will be profitable. Now, if you start dropping $1,000, $5,000, $10,000 loss, well, it busts the rule of 5 and it doesn't work. So that, my friends, is how you manage risk. You understand, and this is so pivotal, like when you hear that high failure rate, it's because people think about what they can make. They think about buying the Lambo, right? But they never think about their downside. If you're always cognizant of your downside, what am I going to lose if this trade goes against me? You're more likely to stick to that stop. You're more likely to cut your losses. And the funny thing is, you're more likely to let your winners run. Like, how many of you buy that $1 cross with no trade plan and you sell at 105 and then it goes to $1.50? It's because you were impulsive. You didn't let the trade shake out. And as soon as you saw green, you're like, I'm actually in the green, I'm out, okay? Having a plan lowers the emotions. You'll still be emotionally invested. You can't eliminate it. We're not robots. But it will lower the emotion. It will make you much more likely to actually follow that plan. And now you're not making random moves at random times, hoping and guessing, what do I do now? I'm in the green, what do I do? I'm in the red, what do I do? Okay? If you're ever asking yourselves those questions, risk management, rule of 5, and having a plan will massively improve it. Now, you got to stick to that plan. Okay? That's sometimes when people that I mentor and stuff, they're like, yeah, I was going to stop out at 90, but it's at 70 now. What do I do? Well, I'm like, you should have followed your plan. And that's why I'm kind of known for being that guy. So let me know, my friends, are you using the rule of 5? Are you mapping out your trades in advance? Doesn't guarantee you're going to win, but it massively improves your success because now you're doing less chasing, less panicking, less emotion in your trading. And if you really want to lock that emotional control down, check out the Daily Income Trader System. I'm mentoring traders for over a decade now, thousands of successful students by teaching them all of these rules. And the best way to build discipline, a process, and a methodology is with daily practice. So in the Daily Income Trader System, 2 live webinars a day with me, 5 live webinars a day, every single day. It really cements that process. So hit that link below. You'll be taken to a free webinar, live webinar, multiple times a day, even on weekends, breaking it all down. We'll see you there.